Hello and welcome back. Mitch Argon here with Calneva Realty. I'm going to take you through the Greater Reno Tahoe Real Estate Report in just a few moments for February 2025. Let's get started. Okay, let's jump right in. Like in prior months, we'll start with median price for each of the markets in the region. As you can see, it's a bit of a mixed bag, modestly up to a little more aggressively up for Carson City, which has been a little more active, and then modestly down than the other markets within the region. We're seeing price fairly stable. I went back just before recording this video and took a look at each market going back to January 2022. Of course, we know that June of 2022 approximately was when prices sort of peaked out. They lowered down late 2022, early 2023. And they have pretty much recovered and maybe a little bit on top of that, but not by much. So for the last, let's say 2.5 years, prices have been fairly stable, modestly up, but fairly stable. Take a look at that visually. This goes back 2 years. So you can see here, January last month, 2025, January 2024, January 2023. And you can see that, for example, the Reno market was 528 and 560 and 590 as an example. And that's the blue line through here to see it trending up. Keep in mind, January 2023, prices had dropped down. So June of 2022, if we were to go back 6 months, the median price in Reno was, I believe, 635. So you take 635, you look at that towards the 560 or the 590, you can see we've had a 642 and a 629, a 620. All these sixes in through here, right? Other than this last month had a little drop. So we've been pretty stable at this high water mark at the 635 to 650 range, going back about 2.5 years. And that's going to be generally consistent for each of the markets. They're going to vary a little bit, of course, but that's the overall theme of what's happened with pricing throughout the region and these markets. Looking at homes sold, which has been really a significant factor in the marketplace. Inventory has been low, affordability has been high, and as a result, we've had lower transaction volume. I think I may have mentioned this last month. If I didn't, I went back and looked at 2015 through 2019 sales volume in our region. I took the average of those 5 years and I compared it to 2023 and 2024, and the markets were down. Compare that average for that 5-year period, 30% in 2023 and 25% in 2024. So a material drawdown and sustained, recessed level of price of home sale volume in 2023 and 2024. Of course, we know why that's the case. It's because of the rapid rise in interest rates. That's affected both buyers and sellers, not just buyers, because many sellers need to get a loan on the home they're going to buy if they sell, and that's deterring people, obviously. So we call that the lock-in effect. The net result is homes sold is lower than it was in what we would consider a normal market, where interest rates were not a major factor. You can see it's also a mixed bag in here. Reno is up 42%, Carson Valley down 39%, down 12%. Put that in context, we're bumping around here quite a bit month to month and market to market, but in the aggregate, 2024 was up about 6% over 2023. So kind of a modest rise back up. That was from a downdraft of 30% to a downdraft of 25%, 5-6% from that where we were. So I think this is going to be a slow road back. I don't anticipate rates coming down soon or dramatically. That story has been told quite a bit, and the forecast looks very much like the rearview mirror. So I think this home sold volume here is going to stay somewhat suppressed and incrementally pick up a little bit year after year. It may be 3 or 4 years before we get back to this type of sales volume that we had seen in the 2015 to 2019 sort of pre-pandemic sales volume area. Month supply of inventory, some movement over here as well. You can see that these markets are trending up just a little bit. So inventory remains still very tight. And so we're still in strong seller market territory. And that's just a fact. You can see if you look down here a little bit further, that Carson City has gone down quite a bit. There's been quite a bit more sales activity in Carson City. You see up 17%. and inventory remains low. So that market's tightened up a little bit. Carson Valley has loosened up a little bit. It's up 52% at 3.4 months, which is starting to tease that 4 to 6 month range, which would be a neutral market, but still at 3.4. So still in a seller's market. And on down the line, the Tahoe market, which I've mentioned many times before, at 4.1. This number really does not mean as much in the Tahoe market as it does in these other markets. The dynamic in the Tahoe market is very different, being a second home, primarily a second home market, with a very, very large buyer base, and many homes, many sellers not really needing to sell a home because it's a nice to have amenity for them. It's a second home or third home, or fourth home in some cases. So this number is not really a strong indicator of what's going on in the market in Tahoe. Very different dynamic. In terms of inventory, you can see here current February 2025 compared to February 2024. Most markets are modestly up. Actually, they're up quite a bit. Carson City and Dayton down each 21%. But when you look at this on an aggregate basis, again, it's important to look back probably since the middle of 2022 or in 2022. So we're up. If you look at the Reno blue chart here, blue bar here, we're up here 448 over 348. So we're up 100 homes in current inventory compared to a year ago. But again, if you go back 2 years ago, which I think is really, in some respects, much more telling, it's very stable. We're actually, 2 years ago, there was 444 homes in the market in Reno, by example. This month, there's 448. So statistically, it's the same inventory levels we had 2 years ago. I think these inventory levels will continue to rise a little bit, probably not very much as we go forward, but they're probably going to loosen up and rise slightly, but not in a big way. And rising inventory creates more of a buyer's market. There's just not a lot of motivation or incentive for many people to sell their homes if they have to take out a loan. So that's really suppressing inventory. And I think that theme's going to play out here over, I think, the next two to 4 years, actually. It's going to take some time. Month supply of inventory we talked about. This is a visual look at that. You can see the Carson Valley market in gold here breaking away from the pack. I think that this may be a function of the Carson Valley market being more of a relocation market for a lot of what's going on in the marketplace. People relocating primarily from California and possibly other places as well. Less of a factor in the Carson Valley market is the local economy and jobs and job growth and companies relocating and things like that. The Reno Sparks market is a little more active in terms of increase in market activity, and so this is what we see. And of course, the markets in Dayton and Fernley are sort of bedroom communities to Reno and Sparks. They're going to follow that market a little more closely. So I think that's part of what we're seeing right here with this breakout. That will be it for this month. I hope this was useful for you. Thanks for watching. We'll be doing these each month as we go forward. And just as a reminder, just below this video, there's a link to the Greater Reno Tahoe Real Estate Report. So if you don't want to look at the video to see the numbers, you want to dive into it on your own. It's a PDF, which is close to 40 pages long. And you can look through a lot more charts and graphs for the region. I'm just pulling out a summary here to give you kind of the Reader's Digest version of what's happening in our market at this time. So thanks for watching. I hope it was useful. Until next month, be good. And if you need any help, please reach out to me or to any of our agents you might already be working with. I'd be happy to help you further. Thank you.